Ryan, today we are working through high yield, and they are a pre-seed deck. I would call it a climate tech or a deep tech deck.
Okay.
And we're raising to get to completing a prototype.
All right.
And what we need to raise is $1 million. We are
Round number. All right.
right.
$1 million.
Exactly. Now,
Okay.
we went through this deck with Will the other day, the first session, just to talk about the deck overall. Today, we want to talk a lot about go-to-market strategy, but also I want to talk about what it means to really do marketing for customers, investors in general. What should startups be thinking about in terms of getting themselves out there while they're trying to raise? Make sense?
Sure.
What is the difference between doing marketing customer acquisition for, let's say, a B2C versus a B2B versus a deep tech hardware sort of innovative technology? What's the difference?
Yeah, it's a massive difference, right? Because there's likely a lot less targets. Do we know how big their target market is in terms of like number of potential clients?
It's
I'm guessing
smaller, like
it's
70.
dozens.
Yeah,
Yeah, it's
exactly.
it's not hundreds even. Okay. Yeah, and so that puts a very interesting type of pressure on. In one way, it's great because we sort of know what the universe looks like and we can imagine it all, right? Like I can picture 70 people. That makes it nice. On the other hand, it's a lot of pressure because there's only so many people to go to, and so it's not like we can't do mass blast ad testing, for example, with a market like that. Not that it would work anyways, but you have a very different type of approach.
Exactly.
And
Yep.
most of the time also because you're talking about massive deals, I would imagine. We're
Huge.
talking about right, so we're looking at big agreements, long-term stuff, and so lots of investment, lots of trust. It takes something different, right? This isn't just about messaging. This is about your network, your experience. How, do you have industry insiders on the team? Do they have deep connections within these organizations that you're going after? How will that impact things, right? Because you might have deep connections within a single organization or two or three. Maybe you worked for one of them for a long time. How does that impact your ability to go to the others? Do they see you as competitor or ex-competitor, right? Does that change the face? So there's a ton of complexity when we get into marketing to the top echelons of any particular industry. And the bigger the industries and kind of the smaller the number of players are at the top, the more complex this gets.
We always talk about how important founder-led sales are for
Yep.
every company, every startup.
Yep.
But how much more important are founder-led sales for a company like this?
That will depend a little bit sometimes. So if these people aren't industry insiders, for example, now they will still need to be involved in the process, but if they're not industry insiders, they're going to need some to chaperone them in, whether they're doing founder-led sales then or founder-supported sales. That might change a little bit in this case, depending again on who the organizations, how we're targeting, what these look like. If you have to go and talk to somebody at C-suite in order to make these things happen, 50, 60, 100 billion, $2 trillion, industry, player, it's a really different thing, right? And so founder-led sales may still have to happen, but it may need to be founder-assisted sales. You may need somebody else to walk you in, is what I'm getting at. So if you founder market fit in this one is going to be extremely important in all likelihood.
Let's get tactile then. What I'm
Sure.
hearing is that it'd probably be very advantageous to get an advisor who's an insider or figure
Yep.
out who on your team could do that. That'd probably be an early stage hack, if you will, to
Yep.
sort of accelerate this whole process.
Yeah, it depends on where they are in the overall process, right? So if they're still like, are we still trying to figure out engineering? We're still trying to get to prototype. We're still trying to do that stuff. So not that it's not important to begin having conversations with potential clients and doing all that stuff, but we may not need to pick up that advisor just yet, or make that hire just yet. We see this happen too, where it's like we need to go hire an industry insider. We either need to add them to the team, I don't know, maybe co-founder or director of something, outright hire. If you're selling into a large industry, that's one thing. But depending on what this is, I haven't looked at the deck yet, so I actually don't know what they're doing. So some of this advice can be a little more pointed for this particular opportunity. But at a general level, we want to make sure that those types of decisions are stage based. Sometimes we'll see people, they'll pull off like, oh, like, okay, we went and got an advisor who works for, advises for all of the other top players in our space. This is amazing, right? But they're still trying to figure out like how to clear the fence at this point. They're still trying to figure out technical feasibility. They're still trying to build basic functionalities. And again, this depends whether we're talking software, hardware, physical products, services. There's a huge difference between those in terms of timing. But you want to make sure that you time these things up so that those people are useful to you at the time. Sometimes people love to add advisor credentials to their team at a point where they're not really ready to utilize them, and this is a bad for everybody, right? The advisors are underutilized. The startups don't get what they need from them. So this is another one of those things where we want to really understand, like, when is the time to fire that bullet. In the same way, they're gonna have to be really careful about when they reach out to the potential clients, given that there are dozens of them. We want to make sure that we're really ready to have those conversations, close those deals, or move things forward. They may not even be, I mean, depending on how deep this climate tech is, some of these plays are like 5, 6, 7, 8 years in the making.
Yeah, that's brutal.
And so there's a lot of buildup for this. Now, the good news there is it gives you time to develop that industry knowledge. And if you weren't an insider, you might be by the time you go on your first sales call.
Yes. And once you land that sale, that's a big whale, right? You're
Right.
bringing up a really good point that I want to highlight. I'm going to ask you this question, but first, I want to highlight that we are using our new investor matching here on Startups.com.
Yes.
And I already loaded this previously. So you see the deal. What we did is it scanned the deck, and then it identified these investors, as the top one. So Zero Infinity Partners, you see clean tech, recycling, chemical, like it all lines up.
Yep.
And so now this founder can start to begin to be mindful of these investors and understand their investment thesis and go and research. And we provide all the information in here as much as we can, as far as the website, all the contacts. Like, you can literally go get their LinkedIns and then start to stalk them on the internet. We've set it all up. So using this, knowing that we eventually want to get here, Ryan, let me pause for a second and ask you another question, because you brought up some really good points. Overall, how much does having advisors, or the right advisor and the wrong advisor, the opposite works, two-way street, work in favor of you in terms of your marketing, customer acquisition? Let's talk about advisors as a whole, because I know a lot of founders try that move. They say, oh, if I get this advisor on board and I could put their name on there, then investors are going to pay attention, the market's going to pay attention. Let's talk about that.
From a marketing perspective, again, I think it depends on what you're marketing, right? If you're marketing a software, your advisor probably doesn't matter that much to the people who are buying your software. If the advisor is right, so is the advisor helping you with marketing, or are we saying how much of a marketing tool is like? So in this case, we pull somebody who's already, a well-known researcher, scientist, something in the climate tech space.
Great.
Are you asking how much of a boon they are to marketing?
Let's broaden it out, because I'm thinking about the people in our audience right now as well.
Sure.
Let's widen the aperture, maybe kind of go back and forth between this and overall. Let me give you an example. We were raising funds. We're helping with investor relations with a B2B app. It was all about employee engagement and dealing with stuff that happens in the workplace. And one of their founding advisors was Deepak Chopra. Right there. And my advice to them was just put it front and center, right on your deck. And we literally got them VC meetings because they said, we're so curious what Deepak Chopra would be advising you about. But at the same time, I wasn't exactly sure how much it would move the needle with customers.
With investors, I think it works far better, because the investors are looking for, how will the business be run, right? How will, do they have what they need to build the right thing?
Good point.
Customers are looking at, have they built the right thing for me, right? And it's very, very much more binary. It's like, is it ready for me? Do I want to use it? Does it have the right promise? The pieces of that are going to look very different. Now, again, it depends on the product a lot, right? Sure. So if it's like my Whoop strap that I bring up as an example all the time, right? This thing that I wear, it's a glorified, well, no, it's not. It's not glorified. It's an amazing device, really is amazing device. But for those of you who are unaware of what it does, it's something like a Fitbit, but I would call it Fitbit on steroids, with a lot more data, more interesting stuff. When they show that they have advisors who are helping them tailor the algorithms, who are, top biomed scientists, they have top athletes testing it. All of these things start to matter. Now, they may not be advisors as much as advocates in some case, but that kind of stuff can help, right? But again, it depends on the product. Do I necessarily care that you had the ex-head of Google AI help build a product, or advise you as you built your product as a customer? Maybe not, right? It depends. Do I think that will make this a better product? But at the end of the day, what I'm trying to understand is it a better product or not? In the case of a business like this, where we're talking deep tech, big industry, big sales, high stakes, advisors can absolutely impact a buyer decision. Knowing who was on the team and who helped you get to the engineering state that you're in may have something to do with how much faith I have that it's going to work.
I agree.
and that it's been run through, a rigorous enough reviews that I feel like it's worth looking at.
I really think it depends. I'm going to take the same road. It depends as you do. There's a
Yep.
lot of nuance in there. On the same token, we were helping a startup and they were doing like resorts and golf courses, and they got two of the designers on board who've done like some of the most famous golf courses. Now,
Sure.
there's a difference. They were contractors, but they did agree to the project. And the founder really thought, man, this is going to move the needle with investors. Not a peep. It was crickets out there.
Yeah.
And I really think it came down to people going, okay, yeah, you have a really nice designed golf course, but how are you going to get customers in the door? I don't think it's as relevant. And that's what investors were thinking. So I think it's a mixed bag for sure.
It definitely depends. Let me throw an interesting wrinkle into this.
Yeah.
So let's say that if you had this is what it comes down to. It's not whether that would be beneficial information. It's, is that the most impactful thing you can say in that moment, knowing that we only have a little bit of time to share details. Is that the most important detail, right? You want to lead with the sharp end of the spear. So whatever's going to be the most compelling stuff, do that. The advisor seems to be the most compelling thing you have. You've really thought about it. You've leaned back and you said, like, look, when people hear this, they're going to think this, this, and this. How does that stack up against everything else I can tell them about our business? But here's the wrinkle. Here's the wrinkle from the marketing standpoint. We're thinking about this in what I'm going to call the mostly still current, but what will soon be the past marketing environment, where the context window is some seconds to communicate to people.
Good point.
What happens is we are increasingly marketing to AI, where AI is doing the research, where AI is absorbing information. Context window is massive now. I have 8 seconds to tell you something to convince you whether you want to continue or not, Ed. I have, I don't know, 1 million to 10 million tokens worth of context I can give to AI. As we move into these kind of new marketing, am I going to use the word paradigm for the first time in 20 years? New marketing paradigm, that might change a bit, right? Because the AI might go, oh, interesting, right? I'll add that in as one of the factors in consideration between these 15 products that I'm rapidly evaluating for the buyer that I serve. This is an interesting characteristic, right? So don't know, right? So again, it depends.
Wow. You just dropped a bomb on us. Let's continue to unpack that, but
Sure.
jump in the deck a little bit.
Yeah, let's go.
Going to start off with the realizing the values. Motor Oil Will's advice was, hey, it just seems like, now you haven't seen this startup. And actually,
I haven't, but I got to chuckle at this a little bit, right?
Sure.
Yeah, I understand where they're going with it, but like, I know what the value of used motor oil is.
Yeah, once we get to what this startup does, then I think it'll be interesting to revisit this. I'm glad you're seeing this for the first time because we're going to show an immediate reaction. So everybody,
yep.
Ryan's going to act like the investor, and he's just going to read the problem statement. And Ryan, I want you to give me your first cut reaction as an investor, not as an advisor to try and improve it, but what's your reaction to this? The capacity of 70 re-refineries currently in operation worldwide could only process 28% used motor oil generated annually, leaving a revenue stream of 15 billion unrealized and leading to the improper disposal of over 2 billion gallons of toxic waste, causing massive harmful effects to people and to the environment.
Okay, well, there's a lot to chew on there. Holy wall of text.
Yes, right.
So I'd want to work on that a bit. Also, I feel like we're describing multiple problems and for multiple stakeholders, all the way from maybe the companies who are currently doing this to the population at large to the environment to maybe coral reef. I don't know, right? It's a lot, and it's not specific enough to kind of like what they're actually probably going to do.
Now, hang on to that. Let me ask you a biting question, and just be honest. As an investor, would you keep reading after this slide?
In its current state, let me say this. Yes, but out of curiosity to see if the solution statement clears this up.
Perfect.
Right.
And
that's it. I'd be like, well, I don't know where we're going with this. I mean, clearly they've got some other re-refinement thing they're working on, I think. Or I don't know, they're gonna blast it to the moon. I have no idea. Which part of the problem are we solving? That there's 15 billion gallons, that there's money left on the table. What are we actually gonna do? A little bit of both. Don't know yet.
Let me pause for a moment. Everybody, what Ryan happens all the time with investors. Investors will be like, no, this is not going anywhere. But out of morbid curiosity, I'll continue to read it. And either your problem statement has just enough or it's so bad, they just are curious. And maybe you'll catch them on the problem solution sort of upswing after they get to that, or you're just going to keep digging the hole. You don't want to take that risk. This is exactly the issue that investors experience. So let's look at Ryan's reaction here. High Yield Systems brings new breakthrough technology, additional re-refining capacity, and much needed help in dealing with the environmental problems caused by indisposable hydrocarbons?
It doesn't really reflect the problem much here. It didn't bring clarity, right? And so in the curiosity that I had on the first slide as to whether this is going to clear things up, it didn't, right? Bring new breakthrough technology. Like, we don't need to be hyperbolic on any of our slides, right? And that's where we're not, maybe this isn't hyperbolic, but breakthrough technology. It does what? Right? Additional re-refining capacity. Okay. So that starts to answer a little bit, right? So
Okay.
if we jump back to problem, one of the questions that immediately came up that should be answered, right? It says the capacity of the 70 re-refineries currently in operation worldwide can only process 28%. I would like to understand why that is.
Yes.
Right. Why is that a problem? Right. If there's 15 billion unrealized in revenue and they have a capacity issue, why aren't they increasing their capacity? There's almost always a real good reason for this kind of stuff too, by the way. These are big industries. This is, one of the biggest, maybe the largest industry. We're talking petroleum refinement here. So fossil fuel refinement, massive. And so I would want to know, like, why is that happening? And there may be a good reason. They may have a really good reason why they have a solution for this. But like, this is part of where I would rather spend some of that time on that problem slide, helping us to understand that. So we can jump back to solution now, because it just says it adds, provides, well, let's see, new breakthrough technology, additional re-refining capacity. Okay. Much need help in dealing with environmental problems. So now we're kind of back to help needed and deal. Who needs the help? Who's paying for the help, right? Is this just a really nice byproduct of what we're doing? Is this altruistic? Is this part of how we're going to get paid? Again, I'm also looking at this through the go-to-market lens, right? Because I know we're going to get to that at some point, and that's why we're here today, is to talk specifically about kind of the go-to-market piece. And so far, we're not really seeing it. Right. So that problem slide, it's great at quantifying global waste, both some financial and some environmental, but it's still pretty abstract. It doesn't help us understand, like, what segments are we actually tackling? Who are we doing this for? Is this collection services, lubricant blenders, fuel distributors, end users? Who? Right. Because without that, I can't begin to even imagine what downstream go-to-market math looks like. Right. So, and for me, that's problematic. So then if we go on beyond that now, and we're looking at the solution slide right now, again, tech alone is not a route to the market, right? I need to be walked through what the commercial handshake is that's going to get us our first gallon, right? Like, where does it come from? At this point, go to market is still dead silent. We don't even know who the market is yet.
And that's going to be so important, because all investors, everyone, they think about go to market. Like, can we actually commercialize? Will we make money? How fast can we do it? But I want to point out something. And for those of you who saw what Will said, Ryan pretty much said the exact same thing with the solution. I don't know why the problem exists. And now we're not actually solving anything we talked about in the problem solution. For example, I'll point this word out, and you can just track it. It's easy to see. If you go to the solution slide, and there's just one word here, hydrocarbons. Now, let's play a little game of Find Waldo. And if we go back, hydrocarbons are not mentioned anywhere in the problem. No. So you've introduced a new concept, and so there's lack of clarity. But let me ask the next revealing question, Ryan.
Okay.
If you're an investor now, and let's just rip off the Band-Aid, what would you be thinking about this startup overall, just off of these two slides?
I can't process much yet. It's all questions at this point. I don't have, there isn't enough of a platform for me to push off of at this point. I don't know where we're going. So again, I might click through, because what I will hope is that their next slide is market size, and that it somehow starts to tell me a little bit about who they think the market is. If it remains as vague, I'll tell you this, like, I'm already thinking this. If it remains as vague as problem and solution, it's a hard out. It's sort of like 3 strikes, man. Like, I'll give you 1 strike, I'll give you 2 strikes. You get to 3 strikes. If I still don't understand what on earth is going on, like, at least who we're solving this problem for, what the problem is, and who we're solving it for, by the time I get to the 3rd slide, I'm out. Like, I don't have time for it.
Ryan, many founders, I think they subtly complain, or they get kind of salty with me, because I really hammer problem, solution, market size as the first 3 slides. And what you just said illustrates it. Now, everybody here, as you're watching this, you heard what Ryan said. Problem, slide, strike 1. Here we go. Problem, slide, strike 1. Too confusing, lack of clarity. So Ryan's in a fog right now. Solution, less clarity, strike 2. Doesn't flip the problem, doesn't solve what's mentioned in the problem, strike 2.
That's also, by the way, that's hard to do if you haven't clearly articulated the problem. It's hard to flip a problem that we didn't clearly lay out on the problem slide, right? So at this point, it's very difficult to do.
And now Ryan said, I may click through to market size just to keep going. And the next slide, how the system works. Okay.
Oh, no.
Now let's pause. just for a moment. Everyone, I have founders send me pitch decks from all corners of the internet every single day. They
You and
say,
me
can
both,
you
buddy.
please take a look? What do you think about my startup? And they ask all my opinions. Do you think I can raise $2 million? Do you think VCs will
Yeah.
pay attention, etc.? Usually my answer is, I really can't tell you because I don't know what your startup does. Right off of the first 3 slides of the pitch deck, it's that fast. That's as little time that I have because I'm not going to, sit back and warm up a coffee and say, hey, let me just pour through this pitch deck every single slide and try to understand it.
Let me figure it out. Yeah. It shouldn't be a homework assignment.
Yes.
It shouldn't be.
And so if I don't understand in the first 3 slides, I give up. I just
Yep.
say, I'll give some type of answer to either placate or just be really nice and just be straightforward. But that's what investors do, everyone. And hence, the first 3 slides are so important. Ryan, what are
Yep.
your thoughts on this?
No, exactly the same, right? You have to, and this is why I think problem solution market size are so important. If I look at the problem as an investor and I don't understand it, or you don't clearly explain it, and I can't somehow relate to the problem, it doesn't have to be personal, right? But if I can't look at that and go, oh, re-refineries have a capacity issue because of this thing, and it's leaving $15 billion on the table, I go, okay, I understand. Now I get the problem. The solution is we have a technology that will increase their capacity internally. It's something they can add. It's a piece like what does it do? If I don't understand then the solution, if I don't feel like the solution adequately meets the problem, I'm also out, right? But even if I believe these two things, but then the market size is like, there are 7 companies that need this, and each one of them will pay us $250,000 a year for it. I go, well, you can't invest in that. There's no way for me to make my money back from that. So without problem being relatable, solution being understandable and directly correlated to that problem, and market size being big enough for me to care about, I'm gone. Every investor's gone at that point. There's nothing left to think about, right? Because that tees the thing up, right? That's the trailer. This is the movie trailer. This is what will help me decide whether I want to watch the rest of the movie. If I don't like problem, solution, market size, I don't care how it works. I don't care who is going to work on it. I don't care how much money you're asking for. Right? I don't care who the advisory board is. Doesn't matter. Those 3 things determine whether I care or not. The rest of the deck determines whether I believe you can pull it off.
I always say to founders, okay, yes, your deck may be great, but I don't know because I'm not a technical expert.
Yep.
And I know this founder is really smart. I've seen the documentation and it's usually this way. Scientist, right? I tell founders, you're either going to be presenting to investors with all the technical information or investors who are just scouting or associates. They're inside and they have an investment thesis of the industry, but they're not scientists themselves.
Correct.
And you're going to have to pick. Will's response is always, why take the chance? Why not just do something that everybody can understand, and then you can get into the science later?
Yep.
At which point I'm going to lay out 2 scenarios. And Ryan, I'm curious your thoughts. So let's say you're presenting to someone with insider information inside the industry. And this is for all of you in the audience, because I see you, I know what you're raising for. This startup could easily say, re-refineries can only process 28% and lose $15 billion of revenue. Now, I don't know what a re-refinery is. This is the first time I ever heard of the term.
Yeah.
But someone with inside information, okay, understands. And then if your solution was, we help re-refineries process, an additional 50% and make an extra $30 billion.
Yep.
Then those insiders are going to be listening. Now, let's look at the other side. If I'm an investor and I don't know, then I need someone to explain to me re-refineries. Tell me, used motor oil goes to re-refineries to try and get recycled, and they can only process 20% of it, which causes all this damage to the environment and leaves money on the table. We figured out a way to help those re-refineries refine more motor oil so that there's less damage by X% and everybody makes more money. Now, here's the catch, right? If you go deeper, this startup goes even further than that. Not only do you re-refine oil, there's new forms of energy, there's new products. Like, it's not even realizing the value of used motor oil. It is literally reinventing it. Like, it just goes so much deeper on an economic level. I think that founders have to be thinking to themselves, what's the investor? Like, talking to you are an expert in go-to-market strategy. So that's the lens that you put on. But founders just think they're going to talk to themselves like, oh, that investor is going to be just like me and be in my head. And that's a huge mistake.
Yeah, it is. Like we say this a lot, right? Communication is the burden of the sender. And so you have to think about who your audience is, right? Like you and I have both done this. Did you ever just have a deck that you presented?
Never. It was like a dozen
variations per meeting, right? It depends on who I'm talking to. What do they need to hear? What do they already know that I can leave out? What do they definitely not know or maybe not know that I need to include that's important to them, right? This isn't just a one size fits all document. We didn't just write a book and publish it. It's a pitch deck, right? It's not called a pitches deck. It's a pitch deck. It's intended for one use, really. Like in a perfect world, you would be rewriting the deck to some degree based on the information that you had about the investor you're going to go talk to, right? What is their technical sophistication level? What do they typically look for? Are they more go-to-market numbers focused? Are they more deep tech solution? Are they, do they look heavily at the team and only want to talk to, multi-time founders? Do we have that? How do we showcase that? So it really does. It depends on who the audience is, and we have to tailor to that. When in doubt, err on the side of simplicity. If they're highly technical, they will start to ask you highly technical questions. The problem is people in the reverse situation do not. If you present highly technical information to a non-technical person, one of two things happens. Either they don't know what question to ask, or they feel uncomfortable and vulnerable by having to ask. You're putting them into a really, really tough situation. It doesn't have a great result.
Right. On top of which, I would do this all the time. I would say, I'm sure this is going to be a fantastic startup. You seem like you have it all together. I'm not an expert. I don't understand this industry. Therefore, I'm not going to be able to manage my investment. Let's say I'm a general partner and I've got LPs depending on me.
Yep.
I have a fiduciary responsibility
Yeah.
to make sure I'm only investing in things that I can shepherd along. And so if you're blasting away things at me, I will immediately back off. Now, the opposite is also true. If I don't understand it, but a founder gives me a unique, novel insight. Like one time I invested in a CPG company that had to do with superfoods in coffee.
Mhm.
And I get coffee and I get superfoods. It made no sense what they were putting together, the concoctions, all the different types of coffee, how they did it. But they explained to me why just drinking mushroom coffee is not going to work out and why you can add this and you can add that. And I said, oh, I get it. At least I understand. Everybody uses motor oil in some form or fashion. Everybody understands. And therefore, you can get that initial person invested. I immediately took, and I do this all the time, I take those types of decks that I go, that's a novel, unique insight. I think I'm going to pass this off to someone on my team or another investor that has the knowledge, and let's work on it together.
Look, let me just use a real basic metaphor here, right? If we start in the shallow end of the pool, we can keep going deeper and deeper and deeper until we hit our comfort level.
Perfect.
Where we feel like we're okay. We drop people into the deep end. Sometimes they just don't bob back up.
And you don't want to be that person.
You don't. Dunking people in the wrong end of your pool, right? Make it as simple as you can. That doesn't mean leave out detail, because I think that we're seeing some of that in this deck. I think that not only is some of the language a little complex, but it actually also leaves some necessary detail, because I'm still not entirely sure what they're going to do. I'm excited to see this next slide with the diagram, because maybe now I'll understand it. Still don't understand who they're going to do it for, but let's take a peek.
Here's your initial reaction, and we can unpack it. Then I definitely want to get to the go-to-market, because this founder, to their credit, has put in a lot of work. Each system at 31 million GPY annual revenue equals 120 million per year. Additional 130 worldwide systems, TAM 15.6 billion, including additional 50 US systems, SAM 6 billion, and then the objective in the SOM is 1.2 million.
Math.
Yeah.
What happened here? How did we get, what am I missing here? If each system at 31 million GPY, so each system equals 120 million a year. Pause.
Everyone and investors never going to do what Ryan's trying to do right now and figure things out. Never.
Nope. That's kind of what I'm trying to illustrate here, right? So but then there's also feels like, so here's the other thing. At a first glance, in 1.5 seconds, here's what my eyes saw. The math at the bottom doesn't make sense.
Right.
Where's 1.2 million coming from? If we are going after 10 US systems and we were told that each system is worth 120 million per year, is that their annual revenue or is that our annual revenue?
Sure.
Because all of a sudden the math doesn't work, right? Because that should be not that. Right? Like I feel like there's a high school math teacher out there crying somewhere right now. It should be, maybe it's just a typo. Should that be 1.2 billion?
So that's the thing I want to point out. So Ryan, you're always a step ahead of me. Like you're in my mind. Everyone, this is an absolute deal breaker. It's a non-starter. If your SOM or VC is not above 100 million, then it's a deal breaker right away. Just letting you know, because you can't get to unicorn territory. Furthermore, if these numbers seem wildly either aggressive, this is like, we're going to make 5 billion a year, 30% or 33% of TAM, then what will happen is they'll write it off. So you have to make sure that you look at everything holistically, because investors do that. And I realize, founders, that you're not experts in this, but you have to learn to do the basics so you can at least show, even if it's wrong, a thoughtful process of how you do your market slide. That's what investors want to know.
I feel like, again, maybe I'm giving the benefit of the doubt here. I feel like they just put million where they meant billion, because if it's billion, then the math kind of checks out.
Okay.
It's 10 systems times 120 million. Dang, we can't be getting the math wrong. We can't be having typos on a slide that's this important. This is also just not a great way of portraying this.
And why even start at the top with 120 million a year? Just start with your TAM, 15.6, and then work your way down to 120 million. Those are other things that I noticed.
I think they're trying to give some unit economics, right? They're basically saying, but also I would have so many questions about this. Like, each system does exactly 31 million. Like, do these re-refineries all have the exact same capacity? If so, why? That sounds really, is that a regulated thing? Like, what's going on? It just, again, we say this about every week, but the details you put in your deck can do one of two things. One of three, I suppose. They could have no impact whatsoever. They can help you. They can also hurt you. It just opens things up for scrutiny. You give me all this data, and I'm looking at it, I'm going, something here doesn't make sense.
So true.
Right? It starts to make me have all these other questions. Not that questions are necessarily a bad thing, but are they the kind of questions that are stacking me up to wanting to invest in this? Or are you just giving me lots and lots of opportunity to be unnecessarily scrupulous and scrutinous?
Founders make this mistake all the time, and I want to point it out. They combine their projections with the market slide. Everyone going to go on record. Your market slide is potential, is what the market has for potential. That's why your bottom-up TAM, which this company has done, this founder's done, is if you took all the number of potential users and you multiplied it by what you expect to make an annual revenue, that's your TAM. All potential customers, everybody. And now you don't want to be totally hyperbolic. Like, let's say you have a soft drink company, and you're like, everybody who drinks. That's not a good calculation. That doesn't show thoughtfulness. But if you say,
I love Will's example on that one. Red Bull. Yeah. Anybody who drinks beverages, like, oh, really? People with heart problems? Pregnant women? Babies?
So show how thoughtful it is that everybody who needs your software, or soft drink, who solves the problem with your solution, that's your TAM. But this is a pie in the sky number, and investors ask for it not because they want you to make all that money or they're expecting you to project to that, because they need to understand how you see the market and they need to see the potential. And that helps other research such as go-to-market strategy, competitive analysis, unit economics, how much money they're going to put in eventually.
This describes the whole pie. This describes the whole pie. Everything else that they're doing is trying to figure out how much smaller is the spoon than the pie, and how good is this founder at wielding the spoon? How much of this are we actually going to go eat? That's what we're trying to figure out.
Great way of illustrating it. Let's look at go-to-market.
Hang on. Okay, all right. Here we go.
Go-to-market, I'm going to just summarize. They're going to fabricate and commission a system on Crystal Clean site. Crystal Clean will aggregate, deliver terminal use motor system. Then they'll operate the main system. Then Superset plus Hydro Treater will refine the oil and remove metals. And then Crystal Clean will deliver finished products to commercial customers.
So meet our customer who maybe is also our competitor, kind of, sort of. I'm not sure. Why Crystal Clean? I'm assuming that's a company, right? But I don't know that. I guess maybe people in the industry, if you're an industry insider, you'll know that Crystal Clean is a re-refiner. But we're introducing all of these other things. Like, was some of this explained earlier in the deck because we jumped ahead?
No, these words are Super SEP, Hydro Treater, Crystal Clean, all new.
That's what I'm looking at right now. Oh, Hydro Treater. I read that as Hydro Eater. Yeah. I am hungry. Okay. Yeah. So we've introduced a whole bunch of new stuff. Like, is Chemex Global the name of this company?
I don't think it was called High Yield.
Yeah, that's what I thought. So who the heck is Chemex? Who the heck is Crystal Clean?
Right.
What are now? Maybe Chemex Global is a partner that's going to do the fabrication, and maybe they own the Crystal. Maybe I so many questions, and I have so many questions, and I have no answers. Right?
Okay. Pause for a second. Okay, just for the sake of our audience, Ryan. When I tell you, I'm going to show you a go-to-market slide. Let's just reset. Let's level set here. Yeah. What are you expecting to see on a go-to-market slide?
Okay, so it depends. In this case, what am I expecting to see on a go-to-market slide?
Yeah.
One of my big questions would also be, like, did we talk about like the tech and engineering timeline here at all?
No timeline. No, not yet.
With something this big, there's almost always like feasibility testing? Because I mean, do we have this? Is the technology already in hand?
No.
So let me ask this: what are we raising $1 million for? What are we going to do with the $1 million?
We're raising 2 million to finish the engineering and start the process of building a prototype.
So we're not going to market yet.
Interesting. All right.
So this one, because here's the thing: like, we don't want to throw a bunch of stuff into the deck that's not going to happen in this raise. Now, of course, we have to show them some future stuff. Yes.
Okay.
Right. But I'd be really careful how I talk about this. In this case, if we're trying to finish engineering and get to prototype, that's what we're doing.
Right. Yep.
I'd be talking about where's that prototype getting deployed? Who's going to use it? Who's going to evaluate it? How are we going to get into these conversations? That's what go-to-market looks like. That's the next step into the market. We can't talk about going and deploying a full, because you just told me you need $100, and I'm like, for what? And you're like, to build a skyscraper.
Right.
Like, huh? There's clearly this is seed or pre-seed? Pre-seed.
Pre-seed. Yeah.
This is pre-seed. We're not going to market on a pre-seed with a product like this. We're just not, like, unless I'm missing something really big here. And again, I haven't seen the whole deck, but we're not going to market with this. So what we're going to do is probably try to peddle our prototype around. So let's talk about what that looks like.
Everyone, first off, for those of you, and some of you are new and going through this, and we're going to get to the go-to-market strategy slide. You can't just have a laundry list of things that we're going to do. It's
Right.
not a go-to-market strategy.
It's not your
strategy.
It's not your project tracker. It's not.
Next, you have to show a unique insight or a hack or explain, we can do something that other people either won't do, they haven't done, haven't figured out. We've got inside connections. So literally, if you explain, here's our insider connections because of our contacts, our advisors, here's how we're going to go to market.
That's the word that's missing in all of this. Because, right? Why is it this?
And Ryan totally exemplified the reaction investor will have, because founders say, well, what do you mean? This is the go-to-market. I'm going to build the next Amazon. Eventually, it's going to have massive distribution, and that's our go-to-market. That's, you're in the market. You're distributing in the market. That's not go-to-market right now with the investor's money. And Ryan illustrated this beautifully.
Yeah, we can't just, it's the analog to saying, we will build it, they will come, right? No, and particularly when you're talking about something that is big, deeply technological, highly capital intensive to do this stuff, we have to show, like, if it's going to be multiple rounds of raising, talk about some of this stuff, but make sure that, again, like, I understand, like, what's next? What are you actually going to go do? I don't need to see how you're going to attack the market once all of this is done. How are you going to get through the next phase? Like, how are you going to know? Because here's the reality. The next people you're probably marketing to after you get your prototype, clearly, you got to get the prototype out. You got to get some evidence that people saw the prototype and it does what it's supposed to do. Or maybe it's an internal prototype. I don't know yet. Maybe that's clear in the use of funds. Don't know yet. But is this just for us to prove concept? Are you asking me to put my money in so you can figure out if this works? Are you asking me to put in money because you know this works, but you need a working prototype to show the customers that this works? Because really, your next big marketing job is me again, or somebody like me, meaning the investors, because you're going to have to go raise more money because we're just getting to prototype with this. Unless you also tell me these companies are waiting for a prototype. We've already had conversations with Clear, whatever, I forget who was on the slide, Clean Clear, whatever it was. They are waiting for the prototype. If the prototype produces these specific results, they are ready to invest in building a working unit in one of their sites. Okay, now I get how we go to market. Now I understand it.
Let me throw in one more wrinkle. This will be our last point. Ryan, they do have a small beta pilot system. It's like a little proof of concept handheld jobby, or like a localized thing, right? So they need the money for engineering for the big guns to show the big boys. You can buy this, but they're able to do BBLs. I don't know what that looks like. I'm going to say it's like barrels or something like that per day.
It's funny because they were like for BPD, and then they were like, let's explain what BPD means. And then they didn't fully explain. I think it's barrels per day. Right. Actually, no, maybe not. Could that be billion barrels per day?
That would be really hard.
See, now we got to go Google some stuff. Investors just left.
Right. But Ryan,
again, maybe this is industry jargon that anybody with a reasonable amount of understanding of refinery or re-refinery would know. It ain't me, right? And it may not be a lot of the investors.
So knowing this, that they've got like a small localized, maybe it's sitting in someone's backyard or warehouse.
Yep.
How would you change the go-to-market strategy? Just brainstorm. I know we're missing a lot of detail, but just brainstorm some ideas to improve it.
Well, I would want to know who agrees with you that this little prototype, this little kind of like proof of concept actually does what it's supposed to do.
Right.
Right. Has anybody in the industry, have any of the 70 customers, anybody in their teams looked at this and gone, interesting. Yeah, that produces the result we want. This creates a level of refinement that is possible and plausible for us. And one of the things, is it answered anywhere in the deck? I'm still not sure which part of the problem we're solving for, or how we're solving it, right? Are we we're increasing capacity by doing what exactly, right? So are we just giving them a different machine? Are we improving their process? Are we allowing them to make it into something that it wasn't otherwise creating? Because you talked about like multiple economic downstreams, but I don't know what any of them are yet.
Mm.
And so part of where the go to market would come from is which is the most obvious of those? Which one of those small pieces can we tackle? Is there some very particular thing where it's like, look, used motor oil from this type of engine is most likely to be turned into this byproduct that is sold to these people? Show me how we do that one little path. You don't need to show me how we go from zero to servicing the $15 billion market. Again, like I think I said at the beginning, how do we get to our first gallon? Like,
Right.
who and why? What does that look like? What is that really specific, tiny, narrow ICP slice? I want to understand who that is. And that has to be something I understand before we get to the go-to-market slide. How can we know to go to market if we don't know who the target customers are? We've been given a customer, so presumably that's the target customer, but what made them a target customer? And what it is exactly that we're going to sell them, meaning like what piece of this whole system, what are we trying to sell them on? Are we trying to sell them conceptually that what we do works? Are we trying to get them to let us run some of their feedstock through it? I don't know yet. Then we can talk about what that sales strategy or outreach should look like. What are the sales channels? What's the sales process? What's their pricing strategy for this? And what's the structure of the humans that we have or would need to be able to do that? Or what is the marketing strategy so that they find us? But again, I still don't know exactly what problem it is, which part of the problem we're solving for who, what exactly we're going to go sell them next. So without that, go to market just kind of can't happen, man.
Everyone, it's why we just want to be straightforward. And we've had this happen with deep tech before because it's true. It's not in this deck. Ryan pointed out, we don't know if this is an add-on, if there's a software upgrade. We don't know if it's an entire refinery unto itself. Therefore, you have to describe exactly how it's going to work and what you're saying. Are you selling them a gizmo, standalone product, a service, software as a service, etc.? Next,
Yep.
always explain why by using the word because. Show the insight that you have and explain it instead of just things that everybody's going to take for granted. Oh, we're going to do business and customers are going to knock on our door. That
Yep.
doesn't help. So Ryan's really broken down all the swirling questions that go into the mind of a customer. And listen, also an investor, very important. And if you think that Ryan was super straightforward, how do you think Zero Infinity Partners is going to respond if they're a major investment and they've got multiple partners? They're in New York. They've got, let's say, $50 million to deploy right now. You don't think that they're going to ask these questions. So what Ryan demonstrated, everybody, it's a good practice and a lead up, an example of what will happen. Ryan, last word to you. Anything on your mind in terms of how founders should process what we talked about today or what they can take away, what they should do themselves?
I want to echo back to something I said before around like why problem solution market size are so important and then what the rest of the deck really is intended to do. Problem solution market size make me care or not, right? They get me interested. They make me decide whether I want to understand whether I think you can do this. If I don't care what you're about to do, I don't care whether you can or can't. And so I think you really have to do a great job of selling that part of the story. And then the rest of the deck, go to market included, needs to stack up into enough evidence that says, yeah, this is worth digging into. This is worth, I believe that they can actually do what they're talking about. Right. And the story needs to hang together. In this case, and look, I have written my share of confusing and bad pitch decks, and this is probably version 1 of 1,000, right?
Yes.
They've got some work to do here, sure. And it's not unfixable, right? I can't evaluate the idea yet because I don't understand it well enough, and nobody needs me to evaluate their idea. They need the investors to do that. They need industry professionals to do that. What I can evaluate is how well this deck is telling the story, and clearly it is not. We want to talk about some specifics around that, like the go-to-market piece, but like just the go-to-market. We've got to be specific. We want to try to show some customer validation. We want to address things like the chicken and egg problem. Like, how do we get customers if we have none, especially in an industry this size where there's a lot at stake? Show that we understand like why we're going after. I talked about this last week too, but like why we're picking the one that we're going after is really important. Presumably there is some reason why they picked that one single thing, but there's something else we want to understand about telling that story in that way. When you tell me you're going after one specific, like are we hanging all of our hopes and dreams on a single client? Why? Right? Again, there might be a great reason for that, but these are all the questions that are going to come up. So I would urge all founders to sit and look at their decks and think about, in addition to what I'm saying, what am I not saying? What are the likely questions that are going to come up? And are those good and positive questions that I want to lean into? Or are those things that should have already been apparent to the investor before we got here?